Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks trimmed losses on Monday on growing hopes of an Iranian peace deal even after President Trump threatened to destroy ships impeding a US blockade in the Strait of Hormuz. Now, stocks were actually very green here today. A lot of the red we saw was in defensive sectors, defensive stock stuff like utilities, consumer defensives, healthcare right here. If you look at telecom services, that's also a defensive name. Those were red. Everything else was largely green. We definitely saw moves in the AI trade, stocks, semiconductors, technology. Look at this, infrastructure and software, really green today. I think we did see a bit of a rotation from Nvidia into this part of the market right here, because these parts, software, infrastructure, even Microsoft trading at 21 times this year's earnings, looking very cheap in hindsight in aggregate. Financials are putting it up there as well, except for Goldman Sachs, which reported its earnings. Now, Goldman Sachs was down 1.6% on its earnings, but the earnings were absolutely stellar. There's a couple of idiosyncratic issues there with them. Berkshire was flat, and all in all today was just a green day in aggregate, with software being the best performer by almost an entire standard deviation. You can see right here, IGV up 5.39%, tech up 2.12%, financials up 1.74%. Guys, we may have seen the bottom for software, and I think right now the risk to reward in software looks really good. You know, we've been bullish on software for a while, particularly in Reddit. We've been pounding the buy signal on those names for the better part of the last, I would say, 6 weeks, and I think we may have seen the bottom today. An absolute stellar move here in software stocks. Now, looking at the Russell 2000 and the S&P 500, they were up 1.43 and just under 1% here for the S&P 500. Very solid day. We saw a little bit of a late day into the close rally right there. The only red we saw was staples and utilities. Everything else was green, along with gold, which was down here today. But just a solid day for the market, particularly in growth stocks. Growth stocks were up in a very big way. Large cap growth of 3.11%. We also saw gains in large cap core as well as small cap core. But ultimately, right, it was just a rotation into equities. Everything was green, particularly growth stocks. US stocks were the leader. We didn't see much from European stocks or Asian stocks or Australian stocks, but we did see from the market mover US stocks, and that's ultimately what matters. However, I do think these markets are going to be green at the open a little bit later tonight. You know, in American time, in the nighttime session, these indices should be very green, if you ask me. And all of this positive price momentum is stemming from the fact that over the weekend, we had talks with Iran in Pakistan. They didn't go so well. The US delegates left pretty early in the negotiations. Donald Trump came out and said he was going to impose a blockade on Iran, blocking all of their ports, and that is officially in effect right now. However, President Trump did signal that the Iranian leadership called his administration on Monday morning to work out a deal. This came after Trump threatened to destroy Iranian ships which are going to impede the US blockade. So the US is blocking Iranian ports right now. So there is a blockade happening in the Strait of Hormuz by Iran and the US. Now, the new circling is that Iranians are considering ending their enrichment program in exchange for sanctions relief, and Iranians couldn't easily communicate with leadership during the weekend, and that's part of the reason that there was no final deal. Trump did come out and say that the Iranians agreed to almost everything. The main sticking point was nuclear. They think Iran will now agree on nuclear, and the US will get Iran's nuclear material back. If not, there won't be a deal. So it looks like there's going to be some form of a deal. Iran is agreeing to a lot of the US terms, but they want sanction relief and they want some form of reparations. Now, I think the US is going to put this in the form of investment. But all in all, when we went from talks of a deal, peace talks in Pakistan, to peace talks ending very quickly, to now peace talks back on the table and Iran agreeing to almost everything, the market is looking at this as pretty much a win for the US, which it pretty much is. And it doesn't look like the blockade is going to be enforced aggressively. So that's why stocks were stocks were down at the Sunday futures open. The S&P 500 was down 1.5% right at the open, and now the S&P 500 here today was up just shy of 1%. So it really goes to show, the big move we actually saw in the market here today. That is a massive reversal, and it really is mostly just on this. At the same time, we saw Morgan Stanley come out and say, we think much of the adjustment for geopolitical risk, private credit concerns, and AI disruption has already taken place. Morgan Stanley say buy the dip. When we look at Jacob Morgan, they said markets could show more weakness on renewed escalation, but we stick to the view that if one has a longer time horizon, 3, 6, or 12 months, then one should be using this weakness to buy the dip. And then we also got another note from RBC on the rebound. Thinking about the near term, it appears to us that the S&P 500 has established a fragile and foggy bottom by the dip. And that is ultimately why we saw markets green here today. The truth of the matter is, markets have likely put in a bottom. Analysts are seeing it. The market is seeing it. We foresaw it weeks ago. We were buying on this pullback. Valuations looking really attractive. And now that we're entering into earnings season, we are going much higher because earnings season has kicked off to a very good start. Goldman Sachs reported their earnings today. Now, despite the stock being down 1.8%, this was actually a really good quarter from Goldman Sachs. Now, profits were up in the first quarter, fueled by M&A deal making and record equity trading. But the reason why the stock was down 3% had to do with revenue from fixed income, currencies, and commodities, which fell short of expectations. Goldman Sachs reported that net earnings rose 19% to $5.6 billion in the first 3 months of 2026. That came through as $17.55 in earnings per share, which exceeded the expectation of $16.34 in earnings per share. Goldman said revenue in its markets division rose 8.6% to $9.3 billion, driven by revenue in the bank's equity trading business. Deal-making fees jumped 48% to $1.5 billion over the same period, driven by its M&A advisory unit. But the trading division within fixed income, currencies, and commodities fell 13% for the first quarter in 2025, and that weighed on earnings. But I think overall, the market's going to look at this. The key components of the business, the money makers of the business are roaring, and that's why you saw a massive dip buying opportunity from the lows. And I think this is going to really support the market as a whole. The revenue beat on the top line in aggregate. Earnings came in better than expected. The bank is firing on all cylinders, still growing at that mid-teens rate. You love to see it. However, Fastenal also reported their earnings, and it wasn't too good. They were down about 6.8% here on the day. Now, the company met Wall Street's expectations, with revenue growing 12.4% year over year to $2.2 billion, which was in line with consensus estimates. Key profitability measures such as gross operating margins also held steady compared to the same quarter last year. However, merely meeting expectations is not enough to satisfy a company like Fastenal, which does trade on a bit of a premium valuation. Some analysts and investors appear disappointed that a portion of the sales increase, about 350 basis points, stem from pricing actions rather than pure volume growth. That was the only real sticking point. That's why the stock was down 6.8%. But other than that, a stellar quarter here from Fastenal. And then for everything we saw today here, guys, there was 4,300 advances, 1,900 decliners. We saw outflows in the Nasdaq and the New York Stock Exchange. S&P 500 gained about 1% today. Market momentum continues to remain really good. And this is ultimately what's driven a lot of our investment decisions. When we were looking right here, we said market momentum last week and the week before wasn't too good, especially in the longer term moving averages. But this is the buying opportunity. And now that we have really good market momentum across the board, we just want to hold and eke out as much of the gains as possible on the way back to all-time highs. And the S&P 500 is 2.3% away from all-time highs. Now you can see right here, I think there's a bit of an issue with TradingView 500. Was down 0.1%, but the futures are up 1% right here. Very interesting. You can see quite a difference, 68.16 versus 68.88. However, we do know that the S&P 500 on a day-to-day basis is up 1%. The Nasdaq was up 1%. The RSP was up 1%. So we had a very strong day through and through here in the markets, with futures all up 1%, including the Russell 2000, the Nasdaq 100, and the S&P 500. Internationally, stocks were green across the board. Crypto absolutely rallying, and we continue to see a bottom process being put in right there, approaching some key levels where we could be breaking out from, right? And then when we look at the macro front right here, volatility was down 0.5 percentage point. We did see yields come down in a big way. The dollar did come down in a big way. Very supportive for equities across the board when you look at that. Gold and silver flatly on the day, didn't really do much of anything. And then crude is which at one point was at $105 a barrel, paired all of those gains you can see right here, and is now pretty much where it was on Friday at the mid 90s area right there when it comes to dollars per barrel in terms of light crude oil futures. And if you look at Dutch crude, Omani crude, they are significantly lower. The nat gas actually falling here on the day. But when we look at the S&P 500, guys, it's very, very obvious. We said, now let's actually use the futures. Let's use the futures. The futures are a much better indicator right now. So when we looked at the S&P 500, right, we said we were looking for one thing. We were looking for a move and a breakout above the 200-day. That's exactly what we got. We're then looking for a pullback to the 200-day. We did get this intraday, and we were looking for support to be had here for next move to the upside or the downside. It looks like this may have been it. We may have had not quite a support, but sort of like price action, price discovery at this level, and then a move from here. But we are a stone's throw away from all-time highs because of earnings. Valuations still look reasonable, not quite as reasonable as they did down here, but valuations still looking really good in aggregate. You could probably say, hey, the S&P 500 is looking a little bit oversold. You can see right here with the price action as we approach these all-time highs. I would have really liked maybe for us to stay at these lows a little bit longer to buy at a lot lower levels, but this is why we buy at every 5% pullback here in the market, and volatility is ticking down. You can see the VIX has come down significantly, and equities are always going to rise on the back of that. Looking at the Nasdaq 100, very, very solid momentum, as you can see right here. Again, gapping up above the 200-day moving average and moving towards those all-time highs. What's not to love about this market right here? Now, even though the equity indices in aggregate are still, very close to their all-time highs, but there's still great value to be had in the market. For example, if we look at Nvidia, on this year's earnings, it's trading at 21 times. It's trading at about the S&P 500's market multiple, right? It is still about 10%. It's still in a technical drawdown, right, off its all-time highs. So, you're looking at a stock that even right now trading at 21 times earnings. Right here, it was trading at 19 times earnings. On next year's earnings, right, it's trading at like 16 times. I think this is really, really good. The semi space is going to continue to rally, and it looks like we are sort of holding this key bottom area we formed right here. We've retaken the 200-day moving average. I wouldn't be surprised for us to go ahead and retake the all-time highs here for Nvidia. I like the stock. I like the valuation. Still a massive, massive runway for growth. I think you want to be a buyer of Nvidia right here. And guys, when we look at the Mag 7 in aggregate, the valuations are really, really key. So go ahead, follow me on FinFluential X on my Twitter profile right here, guys. And you can see the valuation for the Mag 7 look really, really good right now. I mean, look at Google, 26 times. This is calendar year 2026 earnings, right? This is not even next 12 months. This is like next 9 months. Google trading at 26 times, Apple at 29 times, Nvidia at 22 times, Meta at 20 times, Microsoft 22 times. Guys, you're looking at low 20s multiples for these names. If you look out to next year, these companies, some of them, stuff like Nvidia, Meta, Microsoft, even Google, are trading in the high teens, mid-teens multiple, right? Very, very attractive valuations if you ask me, across the board. And that's why I do like the Nasdaq 100, or you can just go ahead and buy the MAGS Mags ETF right here. It has Netflix, AVGO, Walmart in there as well. This is still a little bit off its highs, significantly more than the Nasdaq 100, because it is a lot more concentrated. But yeah, you have to look at this and say, hey, stocks have really come off their lows. Mag 7 are yet to grab their 200-day moving average, and this is why we could definitely see the S&P 500 and the Nasdaq 100 still have legs well above those all-time highs, because the Magnificent Seven are still, in much more than a technical drawdown. 10% of its highs right here, very, very similar to Nvidia. And I mean, if we get a rally 10%, the Nasdaq 100 is definitely taking out its highs and above, and then you go from there. But if you don't want to buy the Mag 7, what individual stock should you buy? I do like Reddit. Reddit was up in a very, very big way today, up 6.88%. We said this is looking like a bottom. That's exactly what we're seeing. If you think you've missed out the rally here, you haven't. We are still about 50% off its all-time highs, well below the 200-day moving average. Don't be afraid to get in on a name like this where you start to see strength. Yeah, you may not have caught the bottom, but ultimately looking for a signal like this is probably more healthier, right? Especially if we go ahead and break above, maybe this 150, 155 area. If we go ahead, break above, use it as support, and then continue the rally and retake the 200-day, that's when things look really, really attractive. And you can see right here, when you retake the 200-day for Reddit, right, we normally go ahead and retest it, and then we have a rip roaring move to the upside. So guys, getting in right here, this is probably the place where you want to start getting in. Maybe selling an in the money cash secured put might be the way. Maybe a 140, 135 cash secured put might be a much safer option if you want a little bit of a margin of safety. But I do like Reddit. I also do like Lemonade, LMND. A very, very good day today, up 7.88%. But I think it's still going to trade sideways in this range. And then a name I've been looking at a lot lately is Credo Technology Group. Again, up 12% today, 8% in the post market, about to regain its 200-day moving average. I really like the stock, and the valuation is really, really cheap right here. It has a lot of photonics. It has a photonics segment in its business. Photonics is a huge driver of the market right now. AXTI has seen a massive gains. We've been long this name from about the start of this year, around about here, the $20 mark, and it has gone on an absolutely stellar run to the upside. I do like photonics, and I do like all of those names that I just mentioned as well. I also do like crypto. I think we are pretty much at the bottom right here. I think once we take out the 75,000 mark, onward and upward to the 200-day moving average here for Bitcoin, and we could see 100K in very short order if we take out the $75,000 mark. Ethereum is about to go on a rip roaring rally. You want exposure to Ethereum, and again, once we break above the 2400, 2500 area and retake that 200-day, I mean, you're looking at levels at 3500 very easily, very quickly, and you're going to see a rally very similar to this right here. Up, consolidation, up, consolidation, up, right? And it's going to be like 200% plus if we take it on a peak to trough level, 250% gains peak to trough. I think we're going to definitely see that again for Ethereum, most definitely. Now, looking at some of our other proxies right here, the 10-year yield, it did come down significantly. You'd love to see this. But this price action is still a little bit elevated. I ultimately want to see the 10-year yield come down closer to that 4.1% mark. That would be really good for equities. When we look at gold, probably is going to roll over back to this level right here. I do like gold at the 4,400 area, but keep the commodity allocation small in your portfolio. Ultimately, you want the allocation, a big allocation to your crypto portfolio, equities, and single stocks as well. So those are the names I do like. I think crude is going to move lower. I think we're going to see probably crude stay in this range right here, call it the mid 90, low 90s range. I think we're going to retest this bottom right here, and we might retest these highs. Either way, I do like what I'm seeing with crude oil right now, and I do think we're going to go lower in aggregate, especially if we continue to see the momentum we are on the geopolitical front. But all in all, equities look really bullish. Everything is lining up. We've got a great economy. Earnings season is kicking off. Goldman Sachs told us that earnings season is probably going to be as good as last quarter. And if that's the case, I think stocks will invariably go higher, whether it's sooner, whether it's later, higher, upward to all-time highs we eventually go. Now guys, diving into sentiment, this is Goldman Sachs US Equity Sentiment Indicator, which combines 9 measures of positioning across institutional, retail, and foreign investors, and has historically been a statistically significant signal for near-term S&P 500 returns. And we officially hit the 0.07, coming off the lows here where we saw positioning was light, and now we're moving into the stretched positioning territory, but we're not quite there just yet. And at 0.7, Goldman Sachs US Equity Sentiment Indicator signals the kind of setup that has often led to another leg higher in the S&P 500 over the next month. Now, generally speaking, when you look at the playbook around geopolitical shocks, this is generally what happens. We bottom around the 15 to 20 day mark of the event. This is exactly where we bottomed day 23. We've rallied all the way up. What can we expect right now? Probably just a little bit of sideways price action. Normally sideways price action before we continue higher as we digest this massive move to the upside. Now we can see a little bit of a drawdown right here, but it's very unlikely we go back to those lows. This is essentially telling us this is the bottom, because when we look at earnings continue to be revised up to the upside for calendar year 2028, 27, and 2026. So this year, next year, and the year after next. And if that is the case, stocks will continue to rally. And when we look at valuations, they are looking I wouldn't say reasonable, but well off their highs. Look at the Nasdaq 100, guys. At the start of the year, this is where valuations were for the Nasdaq 100, for the Russell 2000, for the S&P 500. We're now trading at 24.20 times. The equal weight is actually in its median range, the equal weight and the mid cap, right? So great. There is great opportunities to buy right now. I think the S&P 500 looks reasonable. I think the Nasdaq 100, I think this looks reasonable as well. I think you want to be buyers of this, especially considering the earnings and the valuation forecast. Now, looking at the macro, look, GDP continues to be revised down, but we're still looking at growth for Q1 overall. Retail spending was up 4% year over year in March and is accelerating in the first quarter. With general merchandise staying solid, apparel is up with luxury and discount barbell showing strength. Home improvement was better month over month, but still slow in aggregate. And when we look at data, I think tomorrow everything's going to be dependent on PPI. The consensus estimate there is for 1.2%, the forecast 1.3%. I think if we could beat these numbers right here, I don't know if we will, but if we can, I think we might just see another leg higher on better than expected inflation news. Now, when we look at the earnings picture tomorrow before the open, JP Morgan, BlackRock, Citi. Those are the big names you need to look out for, as well as Johnson & Johnson, Wells Fargo. Right then after the close, there isn't really much of anything. So big day here on Tuesday as we continue to see the financials report, and they will continue to drive the financial sector in aggregate, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.